Real estate experts were shocked with this update. Some buyers are feeling deceived and others are over the moon. The federal government just disrupted 2023 with an unimaginable shift, and it's divided people all across the real estate industry. And that shift is revolutionary, which means that 850,000 borrowers stand to benefit from this update big time. The Federal Housing Agency, or also known as the FHA, has cut the monthly mortgage insurance by 30 basis points, creating a very lucrative offer to many buyers, especially many first-time home buyers. So if you are tight on a budget, have a low or average credit score, and confused with all the crazy mortgage options in the market, listen up, because I'm going to break down for you all the juicy details about an FHA loan and how you can take advantage of them now. But stay with me until the end to hear the real benefits about this loan and why people are even hating it. Let's dive in. So let's start with information about a year ago. Last year, if you had good FICO scores, if you had a good down payment, if your DTI was low, FHA wasn't always a good winner. And a big reason of that was because of the mortgage insurance. FHA's mortgage insurance would have been higher for most borrowers who had really good FICOs and more than 5% down. Yet the big reason this loan has been pushed on so many people, in my opinion, many times has been because FHA loans are more profitable than conventional loans for the bank. So therefore, that incentive has led people to an option that might not always have been the best option for them. And now with this big update, it's also come at a big time in the market. FHA lowered their mortgage insurance, but conventional products with the FHFA, Freddie and Fannie, their interest rates have been adjusted to be higher in many circumstances compared to the lower rate you would have with an FHA loan. So now FHA has become a really great winner. Why? Well, it's not just the update itself, it's the update in light of other updates. FHFA makes the rules for FHA insured mortgages. The FHFA is a different organization who has just announced new updates for conventional loans with Freddie and Fannie Mae. And what's happened with these loans is that they've had adjustment changes to what causes the interest rate to go higher. In light of these adjustment changes, it has made it where FHA can actually be a better savings for many borrowers depending on their circumstance. But it's a domino. Literally every little thing about your file, up to about 32 different pieces, can now affect which would be a better option for you, FHA or conventional. So the need to examine both is more crucial than ever. And while people are looking through which option is best, stands to show that the mortgage insurance on the FHA loan combined with lower interest rates is creating greater savings for most borrowers, even in comparison to having more down and a higher FICO score with a conventional loan. And for first-time home buyers, this loan has been massively beneficial because FHA allows you to use a lower percentage of student loan debt in applicable debt-to-income ratio scenarios. It allows you to have a higher back-end ratio, meaning that you can have a higher purchasing power even if you have more debt. And third, it's allowing individuals to truly come into the marketplace with a low down payment, yet still have a lower mortgage payment because of the lower mortgage insurance. And specifically, it helps out one set of borrowers more than others. Anybody who was buying with a loan amount that was between $625 and $726 last year before this update now had a massive benefit. They not only got a 30 basis point relief, but because of the new loan limit adjustments with the mortgage insurance, but more around 50 basis points, making a savings of more than $250 a month in many circumstances. With all that, let's review some pros and cons. On a conventional loan, your mortgage insurance does come off. And on a conventional loan, your mortgage insurance does vary depending on credit score and down payment and adjustments that mortgage insurance companies have. On a conventional loan, you don't have an upfront mortgage insurance fee that you have to pay. So those are some pros with it. But the cons are now with these new adjustments on conventional loans, many times the interest rate and the mortgage insurance combined can be higher than just taking that FHA loan to start with, especially if you're looking at a high balance loan, meaning it's above $726,200, and if you're looking at a condo. And so if you're specifically looking at high balance conventional condo loans, you definitely want to check FHA FHA just in case. Some of the highlights and pros and cons with FHA are specifically in the fact that pro, you can have a high back-end debt-to-income ratio in comparison to conventional, meaning you can have more debt and still qualify for a higher purchasing power. Another pro is the fact that you can get lower interest rates even with lower FICO scores using FHA. Another pro is that your mortgage insurance is the same no matter what your FICO score is. And so the FICO score won't have an impact on the variance of how much or how much less you have to pay with mortgage insurance. A con with FHA is that you do have an upfront mortgage insurance premium that you have to pay. This typically gets financed into a loan amount, so it doesn't necessarily impact your cash at close, and most people see their monthly payment adjust very slightly because of this. With FHA's mortgage insurance, you also, in many circumstances, will never be able to take off the mortgage insurance without refinancing into a conventional loan. If you put more than 10% down, there are some variances there, but the general understanding is that with FHA, lower down payment options, you have that mortgage insurance until you refinance out of it. And lastly, with FHA, a big pro here is that you're able to use 3.5% down for any loan product they have up to whatever loan limit is possible. So on a conventional, you can use 3% only to that 726,200, and then after that, you have to use 5% down, or if you have a duplex or a triplex or a 4-unit, your down payment adjusts there. FHA doesn't. It's try and shrewd, meaning that 3.5% is all you'd be required no matter what the loan amount is, as long as it's within the loan limits, or no matter how many units you're trying to buy. Investors are coming to own the houses in your neighborhood, and the government just gave you a fighting chance to be able to grab one and trapped as a renter in 2023. So for those who double down on this opportunity now, your life is about to get a whole lot better. There's always going to be haters and people with chatty mouths trying to hold you back for whatever reason they have. Focus on your family. Focus on the legacy you're trying to create for your heirs. Focus on the success that you deserve to have and the success you're creating for all your loved ones. And like always, like, subscribe, and share, and I'll see you in the comment section.